Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. Going to take a look at the dollar versus Canada as we head toward the end of this week and into the new trading week. What levels are in play? What is the bias? What can we expect next week? I'm going to go through that in this video, so let's get started. Fundamentally speaking, we did have the Canadian employment report come in today, and it was about as expected. It was mixed. The unemployment rate went a little bit lower. The number of new jobs added was a little bit lower as well. The mix of the full-time and the part-time was favored more toward the full-time, but the changes weren't all that great and not that strong. So we are seeing a weaker Canadian dollar as a result in trading here today. I'm going to focus on the hourly chart and take a look at where we are and what we've done this week and going back in time as well. And I'm going to put a box around this area right through here. This area we've seen the price move higher. We've seen the price move lower. We did fall below the low of this swing area, or this red box right here. But that was short-lived and the price moved higher. This is as a result, this is going into the election, and then the results from the election push the U.S. dollar higher. The high prices that we saw in trading this week equal the high price that we saw in trading last week, and that was a key tell from the market to push to the downside in trading yesterday. And that move to the downside was helped by the break of the 100 and 200 hour moving averages. Both of those were converged right here. We saw the buyers turn to sellers, and the price pushed lower into the close, where we came back into this swing area through here, where we had again a number of different swing lows coming in this area, and it goes back into here where we had swing highs in this area as well. So that was another key support. So hence why I draw this red box. And this red box is going to be key going into next week. If we move above the high of this red box, it would be more bullish. If we move below this red box, it would be more bearish. Now, in between sit some other levels, including the 100 and 200 hour moving averages. That's this blue line right here. That's a 100 hour moving average. This is the green line represents the 200 hour moving average. And what I want you to focus on, at least in the short term, because the biases and the either more bullish or more bearish often comes from little short-term nuances. And what we saw in trading here today was that the corrective move in the North American session came down right to the 100-hour moving average. This is after the jobs report. And we found support buyers against that level at 1.38916. That pushed the price back to the upside. We're currently trading at 1.39238. It's not that far away from this level, but there's 23 plus 9. There's 32 pips of room now that the price is put between the 100-hour moving average and the current price. So the buyers are making a play. The buyers are taking control. The buyers are still in control, I should say. And as long as the price remains above this area in the short term, then we'll look for higher levels, perhaps toward the high price, and we'll see what happens up here at the 139.58 level. Now, if the price were to move below the 100 and 200 hour moving average, given what we've already seen in trading here today, that would tilt the bias more to the downside. And below that level comes the 100 bar moving average on a 4-hour chart. We fell below that in trading yesterday. We fell below it earlier this week. But staying below that level would be more bearish. And then we'd look down toward the swing area down here, and also the low prices up for the trading week down at 1.38337. So in this confined area, there's a lot of stories to be told, but I think in your trading next week, pay attention to the 100 and 200 hour moving average. I think that's a short-term bias, and then look for the extremes for breaks either to the upside or to the downside. Now, before I go, let's take a look at the 4-hour chart to see where our high prices are. And if we take a look at the high prices for not only last week but this week, the high price came out to 139.58. That also broke above this high price for 2024, which came in at 139.45. So if as we move to the upside, don't just pay attention to our high prices from last week and this week. Pay attention to the 45 level. If we get above that level, that was the old high price from 2024. Now we look for a break of the 58 level, open the door to the upside. So that's my look at the dollar versus Canada as we head into the new trading week. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.